Welcome back to the Contrarian, everyone. I know it's been a couple of weeks since I made a video, and no, it's not been because I've been bored or the market's been uneventful. And in fact, a lot has happened that I hope to touch on today. I've just been really swamped with work, and life generally has been busy, which isn't a bad thing, but there's a lot to talk about. So I want to talk about Michael Burry's updated 13F filing for the first quarter of 2024. I want to talk about the changes he made in that portfolio filing. Also, we have stocks, gold and silver, basically everything ripping higher on CPI that just came out today. This morning, lower than expected, and everything is rallying on that. So I want to touch on that. And then also we have meme stocks really heating up again. They are back to memeing, or whatever you call it. They're doing what they do best. And, I really want to talk about that as well. Although, maybe there's not as much to talk about there because it's kind of obvious. But first off, the main thing to touch on is Michael Burry and his updated portfolio, changes he made in the first quarter of this year. And there's quite a few things to note. Burry's an investor I like to pay attention to, kind of like Warren Buffett or Ray Dalio or others like him. Although Burry, I would say, probably has a more accurate track record in recent history than someone like Buffett. Burry has probably actually outperformed the market, whereas Buffett has really underperformed in the last 20 years or so. Whereas Burry, it's really interesting to see what positions he has. And I guess to summarize Michael Burry's changes that occurred is he bought more Chinese stocks, large cap Chinese stocks. He bought a physical gold ETF, which is a big change because Burry actually has been somewhat critical of gold and silver as an investment, or he's definitely been critical of gold bugs and the extent to which there's almost a ideology behind gold and silver, as he puts it. So that's a really notable change to note. And then also Burry sold out of a lot of his large US tech type of positions and small caps as well. He sold out of those. So apparently he's not as bullish on US tech or small caps. And looking at his portfolio, he narrowed the focus, so he has fewer positions now than at the end of 2023, but he actually upped his overall allocation. So he's maybe not as net bearish as he was in prior quarters, which is interesting, but he's focusing on less stocks. He maybe has, I think, 16 positions or something like that. And, previously it was a lot higher. So Burry, he's bullish on Chinese stocks. JD.com is his largest position, followed by Alibaba. And he also added a position to Baidu, which all three of those are large cap Chinese stocks. And, it's no mystery why he likely added. Chinese stocks are just so undervalued in comparison to their US counterparts and even European counterparts. I mean, it's really hard to find a stock market of a large developed country or developing country, whatever you want to term China as, but needless to say, a large stock market that is as undervalued as China's has been. And it's really only in the last month or so that Chinese stocks have been rallying, maybe a little longer than that, 6 weeks, but the first 4 months of this year, they were still going down the toilet. So, I mean, getting ridiculously cheap. You were getting Alibaba down to a PE multiple of 7 or something like that, or maybe even lower. JD.com as well. So, it's really no mystery why Burry added so aggressively to these positions. I myself, I do have a couple of Chinese stock positions. I have Alibaba as well as, Burry does too. And I also have NIO, which Burry does not have. I see that kind of as a more tech growth, EV related play. I can see why Burry wouldn't get behind something like NIO. But, Burry bottom line is bullish on China going forward. Even if China doesn't do great, I think they could just do decent and the stock market could perform really well in China, just considering how abysmal of a return Chinese stocks have had in the last 2 years. It's just such an unloved sector. And, as the US counterparts get extremely overvalued, you could compare them, like looking at Amazon or Google, or the comparison to US stocks. Those are maybe very overvalued, whereas Chinese stocks are very undervalued. So you could see a big shift start to take place of other investors like Burry starting to, allocate capital to Chinese stocks, and they could perform really well as a result, perhaps. Now, talking about gold and Burry's recent position in gold, it's really notable that he took this because, not only has he been critical of gold and silver as an investment in the past, and now he seems to have changed his mind there, but also his, how he ended up allocating is maybe not what a typical institutional investor would go with. He went with a physical ETF. He went with the Sprott, a gold physical ETF, and this differs from a, popular ETF like GLD in that, you actually are physically guaranteed your gold. GLD, there's a lot of questions as to, how much physical gold is actually behind the ETF, and it's not a one-to-one backing, but Sprott definitely has a one-to-one backing there. So apparently Burry sees value in going with the Sprott ETF as opposed to GLD that does not have a full backing with physical gold. So maybe Burry is seeing it as kind of a insurance type of position, but also, gold has performed really well so far this year. So depending on when he got on board with it in the first quarter, it could just also be a trade type of position for him. He did not go with any sort of miners, which I find interesting, because the miners have, not performed as well as they typically do during gold bull markets, at least not yet. I would expect that to change here pretty soon. But overall, just sentiment around gold and silver has remained so low that in terms of interest in the miners, that has really yet to happen. And, not talking about Burry, but almost my own assessment is once gold and silver, especially, I would say once silver starts decisively breaking through the $30 an ounce area, that could, prompt a lot more interest in gold and silver stocks, almost with regards to thinking of all the media attention that could get. So far, I've been surprised with how little interest there has been, both from the media side and from just your general, public investor out there. There's been very little interest in precious metals so far this year, even though they've performed very well. And so, I think almost a better indication of when the miners would start to perform well could be when the whole media and news cycle starts catching up with it. So maybe that's a better indication. I don't know. But very notable that Burry did buy into a physical gold ETF. He also sold out of large US tech positions he had. I'm mainly thinking of Alphabet and Amazon. He had 2 large positions in these stocks. He sold out of them. I might disagree with Burry a little bit here. I think that US tech, even though it's overvalued, you could say historically, on a historical basis, US tech is very generously valued, especially when compared with something like Chinese stocks. But, Burry apparently thinks that, big tech kind of maybe has reached a plateau, maybe AI and that whole bandwagon has gone about as far as it can, according to Burry. And so he rotated out of Alphabet and Google, and definitely small caps as well. He sold out of some positions he had had in small caps, and I would have to disagree with Burry here as well. I think that small caps are setting up for some pretty sizable catch-up rallies, just considering how much, for example, the Russell 2000 index has lagged the S&P 500 or the NASDAQ. I think the U.S. economy could, again, kind of do decent, and I think small caps could have some big catch-up rallies, actually. So, obviously they're more dependent on rates. So if rates stay high, small caps will probably, not do as well. And if rates come down, though, like I think is probably likely in the coming months, then you really could start to see small caps perform and actually outperform their large tech or large cap counterparts. So, Burry also sold out of small caps. I might disagree with him a little bit there too. But now broadly speaking, talking about the stock market, of course, CPI is probably the most important CPI report so far this year in terms of the effect it had on the stock market, in that everything, bonds, stocks, crypto, gold and silver, pretty much you name it, it went higher today. Maybe the exception is meme stocks. Those did not go higher today, but that's kind of a whole separate category of financial instrument altogether. But basically everything except meme stocks ripped higher on CPI, coming in just a touch lower than what was expected. I mean, it didn't come in dramatically lower. I think it was maybe 1 or 2 tenths of a % lower than what was expected. But when the markets are so focused on month-to-month data like that, apparently it has a big effect, and is definitely visible today, Wednesday, the day when CPI came out in the morning. Stocks gapped up and then continued rallying throughout the day and closed at new all-time highs. So, it goes to show how important the monthly data is. Apparently, I think most of all for investor sentiment out there, it appears like there were just a lot of investors on the sidelines waiting to almost verify that inflation is trending downwards and continuing to trend downwards. And then when that did happen, all of a sudden, it was almost like everybody started piling into the markets. So, whether it was NVIDIA rallying aggressively, semiconductors broadly speaking, it looks like something like what David Hunter has talked about a lot, and I do credit him completely for this. He's basically the only one saying that, this melt-up was likely. That appears to be happening now, where regardless of valuations on these stocks, they continue to rally higher, not because of, the economy being particularly great or the, companies being that great per se, but just with sentiment being as skeptical as it has been. As much cash has been on the sidelines or in money market funds and things like that. And then you have, the whole fear of missing out type of phenomenon starts to take place, where people take a look back and they're like, dang, if I had gotten into the markets a year ago, I would be up 20 or 30%. Or if I'd gotten into NVIDIA, I'd be up 300%. Like, that kind of mentality starts to take over. And I think this is a great time to talk about the recent resurgence of meme stocks, in that, yeah, you're starting to see that take hold. And even as much as people got burned in GameStop and AMC and all the other meme stocks 3 years ago in early 2021, I mean, apparently all of the sins back then have been forgotten, and people are willing to go to the casino all over again. Everything, whether it had anything to do with what Keith Gill was tweeting about or not, or it could have just been speculation out there related to what he was referring to. Keith Gill was one of the probably the most notable social media influencer who helped to precipitate the GameStop short squeeze. I was definitely peripherally involved with that, not as much, obviously, as Keith Gill. More so, I was talking about it a lot earlier before Keith, and then when it started happening, people took note that I had, talked about GameStop and the short interest there as well. But Keith really was on the, bandwagon of pushing it on Reddit and other social media platforms out there. But, long story short, Keith Gill came back to Twitter after 3 years of being silent, apparently, and even just tweeting about random memes and things like that, started sending enthusiasm all over the place in terms of these previous meme stocks, GameStop and AMC in particular. The short interest was not super high on these, maybe 20% short interest or something, but overall just a massive gamma squeeze, you could probably term it as that, took place and sent GameStop up, I don't know, 300 or 400%, and about the same for AMC. And actually today they came down about 50% from the highs they ended up hitting yesterday. So, I have no idea if this is a lasting meme stock, sequel 2.0? Are we going to start to see meme stocks rip higher for the next week or two? I have no way of knowing that. My hunch is that it, kind of like any sort of movie sequel, it's rarely better than the original. So I'm guessing that this might not be the equivalent of what we saw 3 years ago, but hey, I've been wrong about a lot of other things, so maybe this is even more spectacular than back then, but especially with GameStop, we just do not have that level of short interest this time. So even though shorts are maybe down a few billion, it has not bankrupted any hedge funds yet. So, there's not the over 100% short interest in GameStop, which just mathematically impossible to, cover that kind of a position without making the stock go to the moon. But this time, it does not have that level of short interest. And I guess more importantly, it'll depend on how many people are willing to get into something like this. That is definitely a gamble. If you're getting into GameStop at current price levels or anything close to it, it's a complete gamble, like crypto, in my opinion. So meme stocks are back. Basically everything is ripping higher, in line with what David Hunter has been saying. I see that continuing as well. I see gold and silver continuing to rip higher. Burry actually bought into gold, so apparently that has his blessing in a certain extent. A reluctant gold bull, Michael Burry might be. Bought Chinese stocks, and yeah, he updated his portfolio. So I'll link a Whale Wisdom, his portfolio to their page on the description below. And if you like this video, just consider giving it a thumbs up, subscribing to the channel, and I hope to see all of you again at some point.